Good evening, ladies and gentlemen, and welcome to the Sri Lanka CFA Research Challenge 2022. The CFA Research Challenge is an annual global competition that provides students across universities with hands-on mentoring and intensive training in financial analysis and professional ethics. Now, the CFA Institute Research Challenge, hosted by CFA Society Sri Lanka, offers the participants of this competition the unique opportunity to learn from leading industry experts and compete with peers from the world's top finance programs. Now, before we start the lineup for today's sessions and the competitions, we have an introductory video explaining to you the competition and the journey so far.
What we do as financial professionals is for the ultimate benefit of our communities. And I think it's wonderful that we have teams here in this final today. This is an incredible competition. If you are in the last five, I mean, what an incredible achievement that is. The winner of the CFA Institute Research Challenge Global Final is Ateneo de Manila.
There you go, ladies, gentlemen, and all participants. That's a sneak peek of what's to come if you get through the local competition here this evening as we join virtually for the CFA Sri Lanka Research Challenge. And the CFA Society Sri Lanka is proud to host the 11th edition of the annual local events of the CFA Institute Research Challenge in Sri Lanka. So once again, welcome and a very good evening to you all. To do the honors, before we start off with the competition and the presentations, I'd like to invite Mr. Dinesh Varsovitana, President of CFA Society Sri Lanka, who will deliver the welcome address.
Thank you, Russell. Good evening, everybody. On behalf of the Board of Directors of the CFA Society Sri Lanka, I would like to warmly welcome all of you to the local finals of the CFA Institute Research Challenge. A very warm welcome to the representatives from HECA PLC, the judges, the competition participants, university faculty members, and officials from our sponsors and other guests. The CFA Institute Research Challenge is an annual global competition that provides university students with hands-on mentoring and intensive training in financial analysis. This is the 15th consecutive year of the local level competition organized by our society. We work with universities to assemble teams of students who research and analyze a publicly traded company. This year, we selected HECA PLC to showcase a leading export company in Sri Lanka. The teams prepare a research report on the company while receiving advice and guidance from a faculty advisor and a CFA charter holder who acts as a mentor. The objective of the competition is to promote best practices in equity investment research, but also aims to inculcate in students other critical skills such as analytical thinking, report writing, and public speaking, which are essential skills to succeed in any career. Today, the shortlisted teams will present and defend their findings to a panel of judges who are industry experts. The winners from today's local competition will advance to the regional level final in Asia, and the winner of which will then advance the global finals, which are scheduled to be held in New York. This year's research challenge is a culmination of efforts of more than 5,000 students who have been supported and guided by over 3,000 volunteers across 1,000 universities participating in the research challenge, which is hosted by over 100 societies in over 90 countries worldwide. In Sri Lanka, we had 18 teams participating this year, which is the highest participation since we launched the SLRC 15 years ago. Of these teams, 4 teams have qualified for the finals today. I would like to congratulate all the students who participated in the competition. This challenge is a great test for all students who are bold enough to face it. But like any great challenge, the opportunities and rewards it offers are even greater. Through our partner Equity Knowledge Partners, we provided an intensive training in financial analysis for all the participants in this year's competition. They worked in teams and gained real-world experience as they assumed the role of a research analyst. They were mentored and had the opportunity to network with industry professionals and peers and learn from them. And as we have seen in the past, the exposure and the learning that you have gained through your participation will provide a definite boost to your career opportunities. Whether you plan on being a research analyst or not, the challenge that you choose to put yourself through will have a lasting impact on your lives. As CFA Sri Lanka, we depend tremendously on the support of many people to make this competition a success. I would like to thank all of CFA Sri Lanka's corporate sponsors, especially the Colombo Stock Exchange and the Securities and Exchange Commission, who have been backing this competition since inception. We are extremely grateful to Heka PLC and its management for supporting the competition and taking time to meet with the teams and provide necessary information to enable the teams to carry out their analysis. The series of events which culminate in the final today started last year. And over this period, many people, including university faculty volunteers, CFA mentors, the graders, the judges, and volunteers, and of course the CFA society staff have contributed towards making this competition a success. A special mention of appreciation to our research challenge chair, Samalka, and her team, Inisha and Nilakshi, whose tireless efforts and coordination over the last few months has resulted in all aspects of this competition running smoothly to perfection despite being a virtual event. I wish all the competing teams the very best in their presentations today and hope that the winning team from Sri Lanka can go on to compete and succeed in the regional and global competitions. Thank you, all of you, for being here with us today. And I hope that you will all enjoy the evening. Thank you. Over to you, Russell.
Thank you very much, Mr. Varasubitana. And that was Mr. Dinesh Varasubitana, President of CFA Sri Lanka, CFA Society, Sri Lanka. And now we move on to introducing our eminent panel of judges. Starting off, we have our first judge for this year's competition, Dr. Andrew Stotts, Chief Executive Officer of A. Stotts Investment Research. Now, in 1992, Andrew left a management career at Pepsi-Cola, a fairly successful one, in California to teach finance in Thailand, and has not stopped since as a teacher and a facilitator. In 1993, he found his life calling as a financial analyst, a job for which he was eventually voted #1 in Thailand. In the second half of his 20-year career in investment banking, Andrew served as a head of research, leading teams of financial analysts. Ladies and gentlemen, not worrying too much about possible power cuts here this evening, joining us from Bangkok, Thailand. Put your hands together virtually for Dr. Andrew Stotts, our first judge for the evening. Pleasure to have you on board, Mr. Stotts.
Thank you very much. Great to be here.
Likewise. Moving on to our second judge for the evening, we have Ms. Nruini Fernando, Head of Capital Projects and Infrastructure for PwC Sri Lanka. Nruini Fernando heads the Capital Projects and Infrastructure and Deal Strategy practice at PwC Sri Lanka. She is also responsible for handling PPP-related transactions in collaboration with network PwC firms, and also overlooks deal strategy aspects related to fundraising, family business restructuring, and cross-border transactions. She also serves as a non-executive independent director of Cargill's Bank Limited. A pleasure to have on board our second judge for the evening, Ms. Nruini Fernando. And we move on to our third and final judge here this evening, Mr. Senaka Kakirovara Godage, who is the Director and Chief Executive Officer of NDB Capital Holdings Limited, the investment banking cluster of NDB Bank. He also serves as a director of several NDB Capital Group companies and portfolio companies of Emerald Sri Lanka Fund, a private equity fund dedicated for Sri Lanka. Senaka has over 18 years of experience in investment banking, private equity, and IT services. He's also currently a director of CFA Society, Sri Lanka. Ladies and gentlemen, our third and final judge for this evening's competition, Mr. Senaka Kakirovara Godage. A pleasure to have you on board, to all of you three judges, and we look forward to an intense and competitive set of presentations to come. From our judges, we now move on to this evening's sponsors, to whom we are thankful for. And we start off with the platinum sponsor, the Colombo Stock Exchange. Silver sponsors, Equity Capital Alliance, First Capital, NDB Capital Holdings, Senfin, and Uzabez. Knowledge partners, Equity Knowledge Partners, and event partner, Kaplan Schwezer. Thank you to all our partners and sponsors for making this event and proceedings a reality. Thank you very much. And now we move on to our first set of presentations. Now, before we go into the presentations by the participants and the teams, I'd like to introduce our 4 finalists in the local competitions of the CFA Sri Lanka Challenge. We have the University of Colombo Team 2, University of Jayawardhanapura Team A and Team D, and also our 4th team for the evening is the University of Kelaniya. So congratulations to all 4 teams who have made it through the finals. And to introduce the first team that will be presenting to us here this evening, we have the team from the University of Kelaniya. And this team comprises of Zima Jihan, Risini Ciara, Dimani Silva, and Nitya and Julian Sugivan. Ladies and gentlemen, a big round of applause once again virtually to all the participants in Team University of Caledonia. So over to you. Let the participants join in and settle down. Meanwhile, we have Nilakshi from the organizing committee who will keep time for the competition and the rest of the presentations. So Nilakshi, over to you to give the green light for the participants and the team to go ahead. Team University of Caledonia, all the very best.
Thank you, Russell. So team, are you ready to proceed?
Yes, shall I first share my screen?
Sure.
Yes.
Okay, the screen is visible. Yes, thank you. Judges, are we okay to proceed? Great, thank you. Your time starts now.
Activated carbon, the new black gold. Good evening, investors. We from the University of Caledonia present to you a buy recommendation on the Black Gold Jackpot HECA PLC, warranting a 12-month target price of 93 rupees and 31 cents, a 27% price upside, and a 29% total return on your investment. Our buy recommendation is elevated by 3 salient points: HECAB's fit to seize opportunities in the demanding activated carbon markets, amplified top line from rupee devaluation and capacity expansions, and HECAB's supply chain supremacy that unlocks competitive potential. Activated carbon is a strong absorption material commonly used for purification purposes, and HECAB has superior specialization in coconut shell-based activated carbons with an extensive vertically integrated supply chain. HECAB operates in 2 main segments. The first, activated carbon segment, provides activated carbon to industry applications of water, gold, air, respirator, and other applications. The second, environment engineering segment, provides water treatment projects and consumer products.
It's not only about having the market opportunity, but also how well it is handled and capitalized. In the gold application market, HECAB is one of the most recognized activated carbon suppliers. And gold is trending to be the ultimate safe haven, and HECAB, having already made its move on gold market opportunities since 2016, will continue to secure new customers, expand their market share, and drive HECAB margin growth as they increase focus of gold contribution in the sales mix. Water and air applications, on the other hand, are the most commonly delivered applications of activated carbon between industry peers, and countries are turning towards activated carbon as a pollution solution. In this case, HECAB is well positioned for a 5.1% CAGR due to HECAB's 49 years of experience in the industry, cutting-edge technology, and emphasized focus on air and water treatment as an emerging target market in Asia. Following the rising concerns for pollution, governments and consumers are opting for electric vehicles. 20% of the electric vehicle battery cost is of activated carbon. And HECAB is one of the top 2 leading suppliers of activated carbon to electric vehicle manufacturers and is already in business with the largest electric vehicle manufacturer, Tesla. We believe that this is a unique value driver for HECAB, cemented with the assurance of being able to win more contracts as HECAB is well established and ahead in the industry. Secondly, HECAB top line is amplified through LKR devaluation and capacity expansions. HECAB, a leading contributor to Sri Lanka coconut-based exports, will continue to attract high positive returns as a dollar-earning company. HECAB reported their highest revenue growth of 35% in FY19, included a boost of 12% due to foreign currency translation gains. Similarly, we assure that HECAB will continue to enjoy a boost in revenue as an export-oriented dollar-earning company. HECAB's manufacturing capacity is undeniably ready to cater to the industry demand as manufacturing capacity expansions are underway. Current manufacturing capacity of 55,000 metric ton per annum will increase with the upcoming manufacturing location coupled with optimal capacity utilization above 85 to 88%. HECAB will reflect these capacity expansions in the bottom line as well at a CAGR of 26%. It's not the companies that are competing in the activated carbon industry, but the supply chains that are competing. HECAB's manufacturing plants are strategically located in 3 of the world's largest coconut producing countries that give competitive cost efficiencies, smooth sourcing of charcoal to plants, ability to premium price, and secure market share ahead of peers. Also, amidst the industry-wide global shipping crisis that skyrocketed ocean freight rates, HECOB was still able to record a 62% bottom line growth in FY20 due to the synergetic effect with Haley's group to secure shipping space ahead of peers.
HECOB financials will accordingly reflect our thesis points at a 5-year CAGR of 6%. Revenue will be primarily driven by the AC segment and the EE segment as the secondary revenue driver. We forecasted AC segment revenue to grow at a 5-year CAGR of 6% that will be followed by increased gold application revenue as a high margin product, water application revenue to continue as the #1 revenue contributor to the group, air and respirator series expansions, and promising demand drivers of electric vehicles to drive the energy storage carbons revenue. HECOB's EE segment will support the revenue growth with a 5-year CAGR of 5.5%. This is a result of water treatments project resuming with the ease of pandemic, sustained revenue from odor removal products, and global expansions of Oxypura face mask range. We forecasted margins to return to pre-pandemic levels, increasing EBITDA margin to 27% in FY26. Increased EBITDA margin is driven by the changes in sales mix of activated carbon, premium pricing ability of high margin products like gold, increase in sales volume at a 5-year CAGR of 4%, coupled with the cost savings coming from lean initiatives and HECOB's backward integration. As a result, we expect NP margin to increase and reach 18% in FY26. HECOB has obtained superior profitability compared to peers. We predict this to continue, resulting in a favorable shareholder return with a dividend payout of 20% in FY22.
Our buy recommendation is warranted by free cash flow based valuation arriving at a target price of ₹93.31, a 27% price upside and a 29% total return on your investment. Further, our recommendation is verified by relative valuation, dividend discount model, and ESG based valuation. The free cash flow method accounts for HECOB's impressive and stable future grades, arriving at a price upside of 27%. This valuation was based on a company WACC of 14% and a conservative terminal growth of 1% based on country-wise GDP, credit ratings, and beta. An increase in the terminal growth will further appreciate the share price beyond our target price as seen in the sensitivity analysis. The relative valuation was derived by equally weighing the PE and EV/EBITDA multiples implied share prices based on HECOB's growth, profitability, and risk factors compared to peer groups in Asia region. A 25% price upside further verifies our buy recommendation. A two-stage dividend discount model yields a price upside of 23%, and we also believe that the ESG efforts of HECOB carry sustainable growth potential as it is depicted in our ESG-based valuation arriving at a target price of ₹92.26, a 26% upside. A bull and bear case analysis examines our valuation risk, and in a bullish market, a 74% price upside can be expected. However, the 11% downside in a bear case would be highly unlikely. We also tested our Monte Carlo key metrics through a Monte Carlo simulation, where 80% of the scenarios supported our buy recommendation, with only 6% leading to a change in our recommendation.
We spotlight 2 out of 4 key risk categories that we identified that would potentially curb your investment outlook of HECOB. Firstly, the raw material risk. Unpredictable weather conditions impact coconut shell yield, impacting the production cost of activated carbon. However, HECOB strategically positioned strong supply chain network in coconut growing countries allows for smooth and continuous supply of raw material. Secondly, the liquidity risk. HECOB has had a comparatively higher cash conversion cycle over the past years. However, as HECOB adheres to an aggressive working capital policy, they are financially well positioned to use its short-term assets wisely to pay off its short-term liabilities that generate sales effectively, resulting in a higher working capital turnover.
Considering HECOB's ESG standpoint, we strongly believe that HECOB has a sustainable approach across the aspects. In the environmental aspect, HECOB is one of the only players in the industry with high specialization in coconut shell-based activated carbon, which is proven to be the most environmentally friendly base. HECOB also sources up to 66% of their charcoal requirement to their very own patented green charcoaling technology. In the social aspect, HECOB religiously conducts their flagship initiatives with Purita's Sub-Zero initiative that was recently being conducted for the 7th consecutive year. Satisfied customers are being the best business strategy of all, and HECOP has successfully maintained customer retention greater than 80%. Moreover, HECOP maintained timely employee protocols and workplace safely during the tough time of the pandemic. They were the first subsidiary of the Helix Group to obtain the COVID-19 Safety Conformance Certificate and invested up to $50 million in employee protection. The governance aspect the shareholders, the board is impelled to act in the best interest of you. With 5 of the 7 non-executive directors bringing independent judgment and having compiled with necessary codes, the board of directors have no bias dominance, ensuring the sound governance where your investment is assured to be in good hands.
In conclusion, HECOB is a jackpot awaiting for your investment. Thus, we restate our buy recommendation based on HECOB's fit to seize opportunities in demanding activated carbon markets, amplified top line from rupee devaluation and capacity expansion, and HECOB's supply chain supremacy that unlocks competitive potential. Thank you, and the floor is open for questions.
I think I can ask the first question. If first of all, that was a good presentation. I think you did a good job. You know, I looked at your free cash flow, and I think that the assumptions are reasonable. It just seems to me like this whole thing is dependent on the net margin. And can you go to the chart of the net margin? I think you had EBITDA or some others. Just show us what you got. Yeah. So here, you know, the net margin, let's say, is about what, 15? What was it in 2021? Let's say it's 14 or something like that, and it's going up to 18. 18 is a very high net margin. What is it that convinces you that they can get to that point? I mean, it is much easier to make a graph of an 18% net margin than to actually move it up to that point. So I get your points right here, but just try to help me explain why this is really going to happen.
Yes, that is a valid question, and thank you for your question. So to give an idea about how the margins will come to that level in 5 years' time is basically, as we stressed out in our the first thesis points regarding the industries. So we believe that HECOB's current sales composition of different activated carbon applications, it will change. It will change in a way that they will focus more on high margin products like gold, and also the energy storage carbons that will also increase in terms of their sales composition. So that is one way that the net profit margin would come up to that level. At the same time, as again, we stressed on our third investment point on the supply chain supremacy. That is something that HECOB will definitely grow on. Basically, currently the industry itself is facing a big issue with raw material price increases due to different uncertainties. However, if we actually take a look at HECOB's way of sourcing raw materials, they will be able to get a very cost-efficient way of sourcing raw materials. So that will also drive their net profit margin to increase by 5 years. If you take a look at how they have strategically located their plants in some of the top 5 coconut growing regions in the world, also their unique way of extracting the charcoal from their own charcoal technology as well. So because of this, they can...
Let me just ask one more question, and then I'll turn it over to the other judges. Let's say it's a good story, and you've convinced me a bit on the margin. But my question is, like, to what extent does the market not know this information? In other words, if the market already knows this information, then the market has already adjusted it in the price. So just give us some idea of kind of, you have worked on this company longer than most market analysts, I'm sure. So tell us 1 or 2 things that the market doesn't understand that you understand. And then that's my last question. I'm going to turn off my mic.
Dimani, you're on mute.
Yeah, I'll take that question. So, well, we were stressing on the gold industry and also the energy storage carbons. So definitely the demand for gold is growing due to certain macroeconomic conditions, especially with increasing inflation, especially in the USA. So now investors have turned to gold as a safe haven and also to hedge against inflation. And also we have analyzed that the demand for gold has grown in 2021 by 67% when it comes to jewelry fabrication. And when it comes to central bank reserves, it has grown by 82%. And also when it comes to the energy storage carbon.
So yes, so Mr. Andrew, you asked regarding how the market will realize this. So right now, as you said, we have worked a lot of time in this research. And as Zaima also mentioned, the industries are having many opportunities that HACOP can capture. So what the market is not seeing right now is the fact that in long term, HACOP will be able to capture that market. And that's what the market is not seeing right now. Although the share price is reducing, that's due to macroeconomic conditions. But in the long run, definitely our recommendation is still valid, Mr. Andrew. Yeah.
Okay, over to the other judges.
Thanks, Rooney, if I may go. Thanks, guys, for the presentation. In the forecast, you mentioned revenue CAGR of about 6.5 and 5.5 for the two categories, right? Could you please go to that slide? Yeah. My question is, now this company being largely a dollar income earner, and given Sri Lankan rupee will have a substantial depreciation against the dollar, and also factoring the inflation, don't you think 6% revenue CAGR means almost a degrowth in volume, or there's hardly any growth in the volume of business? So how do you justify some of the capex that you were mentioning?
The volume growth will take place at a 5-year CAGR of 4%. And regarding the capex, so what the capex will be invested on is the manufacturing expansions that will take place to capture all these opportunities. So 6% is a degrowth, is not a degrowth. It is actually a very conservative approach that we're going here right now. And given the market, how the industries will change, this will definitely be realized as well. So the capacity expansions will help HACOP to be able to supply deliver their products to the customers. And the volume growth at 4% year on year, it will definitely carry increase. And also, if you talk about the sales utilization, how much of the expansions that they will convert to sales, that is also maintained between 85 to 88% for sure in the coming years. So that will definitely hit this. It's not a degrowth. It's following the trends that we have analyzed on. And with the rupee devaluation as well, it will further expand as well, the top revenues.
So what you say is revenue growth of 6.5 roughly is about volume of 4 and price of 2.5. Is that the explanation?
Yes, correct. That would be awesome. Yeah.
Okay. So one little question. You assumed a cost of debt of about 7%. But I think already long-term treasury bill rates being double-digit. Do you think that assumption will hold true?
Yes, we do. Because if based on our lower and upper bounds of cost of debt, which is 3.5 and 13.5 respectively. So we estimated HACOP's after-tax cost of debt will be an average of 5.5%. And we expect this average long-term cost of debt of 4% will be further reduced with the transition to SOFR from LIBOR, because SOFR being a risk-free rate. And of course, if AWPR is increasing, we believe with the phasing out of LIBOR and transition to SOFR, which is a USD denominated secured risk-free rate, with effect from June 2023, long-term borrowing rates will be lower. And since HECAB is engaging with currencies other than USD, like Euro, Sterling, Pound, so as an alternative to the transition, European and Central Bank and UK have already sought their alternatives to Euro overnight index average, which is IONIA, and Sterling overnight index average. So we believe the transition risk on the cost of borrowing, if any, will be settled off by these alternatives.
But you would have used the rupee cash flows to discount, right? So is the using a dollar cost of debt, is that accurate?
Can I repeat the question again?
You would have used rupee cash flows for discounting, right?
Yes,
so
yes.
Dollar cost of debt, would that be accurate?
That is not a dollar cost of debt, but a rupee cost of debt.
The 4% you mentioned is a rupee cost of debt, is it?
Yes.
Okay. I'm good.
Right. Thanks, Seneca. So I have two quick questions from you all. One is now, as Andrew mentioned, we see fairly aggressive and very positive EBITDA margins being forecasted. Although you all explained that HECAB is moving towards more premium usage products, isn't activated carbon somewhat of a commodity or a generic product? And what is the differentiation that HECAB has to be able to command these premium pricing that you all were speaking of? Any thoughts on that, or what was it based on?
Yes, thank you for your question. So basically, the reason why HECAB, there are definitely many competitive edges that HECAB has when you compare different peers in the activated carbon industry. So if I'm to point out and how actually these premiums can be charged, during COVID, one of the main reasons HECAB was able to report one of their highest revenues, top lines and bottom lines, is because of their supply chain supremacy. That's why we have continuously emphasized on that point as well. So when you talk about one of the premium pricing applications such as gold industry requires the activated carbon to be there on time, and they basically give out contracts based on the reliability of the supplier. So during the pandemic, HECAB was actually able to show how strong the supply chain is in terms of synergies of logistics, being able to actually deploy their products on time and given their capacities as well as to generate the requirement as well. So in that term, they were able to—
Thank you, Dimani. Your time is up for the Q&A session.
Okay. Thank you.
Russell, over to you.
Yes, thank you, Nilakshi. And that was, ladies and gentlemen, Team University of Caledonia, our first team for the local competitions of the CFA Research Challenge. And they have been analyzing, or rather, the subject company for this year's competition is HECAB PLC. And welcome once again, well done once again to the University of Caledonia. From Team 1, we move on to Team 2. And this time we have Team A from the University of Sri Jayawardenepura. And that team comprises of Ashan Kottegoda, Dulanga Gamanayaka, Malik Nazarhim, Sachintini Birasingha, and Sapna Pawasam. Ladies and gentlemen, University of Jayawardenepura, Team A. Nilakshi, over to you to give the green light and we can go ahead.
Thank you, Russell. Can I request the presenters to have their videos on, please? Great, thank you. So you have 10 minutes for your presentation and 10 minutes for Q&A. On the 9th minute, I will interrupt you and say that there's 1 minute left, and then I will tell you when to stop presenting as well. Are you ready to start? Great, thanks. Judges, are we okay to proceed? Thank you. Okay, your time starts now.
Good day, ladies and gentlemen. Purity comes in many forms, but for HECUB, purity comes in black. We, Team A of University of Sri Jayawardhanapura, issue a buy recommendation for HECUB with a 12-month target price of LKR 86 with an upside potential of 17.42%. HECUB caters to a wide array of applications for activated carbon, ranging from the purification of air and water, the recovery of precious metals, to applications in the value-added segments and environmental engineering. With HECUB reporting a revenue of LKR 25 billion on a sales volume of 46,000 metric tons in financial year 2021, profitability margin stood 1.2 times above its international peers. An expanding market locally and globally for its key offerings sees HECUB on a trajectory for substantial value, not just for the shareholders, but for the planet at large. With a five-year CAGR of 9.3% anticipated for the activated carbon market, HECUB is in a strong position to outshine its competitors. Continuous research and development efforts, the focus on eco-friendly coconut shell charcoal, the strategic global positioning, and a pure-play strategy fortifies HECUB's presence among the giants of the industry. To this end, we forecast a 12-month target share price of LKR 86, yielding a 17.42% upside. We issue this buy recommendation for HECUB on the back of three main value catalysts. One, rising regulations on global air and water purification. Two, strong margin performance by the gold and value-added segments. Three, a sustainable supply model. Making our way to the first value catalyst. Water treatment has historically been a major use for activated carbons. The growth for this segment is projected at a 7-year CAGR of 7.3%, driven on the demand for industrial water and wastewater treatment. For instance, northern China, China's industrial hub, faces scarcity in clean water, and corporations are pressured to treat industrial effluents from laws such as the Clean Water Act of the EPA and the Minamata Convention on Mercury. HECUB's strong suit will continue to be water treatment, and its activated carbons with a wide range of particle sizes and activity levels would cater to this water purification need, putting the company on track to achieve a 7-year CAGR of 11% in this.
Furthermore, air pollution has seen alarming numbers reaching a record high of 52 gigatons of carbon dioxide equivalent in 2019. The COP26 summit saw favorable steps taken in combating air pollution, with pledges made to go net zero and maintain global temperatures at 1.5 degrees Celsius, with the US and China pledged to go net zero by 2050 and 2060 respectively. All these pressures bring tailwinds to HECUB's activated carbons, which have a superior microporous structure compared to their peers. This carbon structure is efficient in removing small molecules such as volatile organic compounds from air. To this end, a 14% 7-year CAGR is forecasted for the segment. Moving on to the second value catalyst. Activated carbon is used in the recovery of gold, and this is good news for HECUB. The demand for gold is on an upward trajectory, driven by gold's status as a safe haven in times of economic uncertainty, as indicated by the VIX index. Rising inflation and favorable monetary policies further augments these bullish sentiments. Gold treatment at HECUB is expected to stand at 28% of total activated carbon revenue, with a 7-year forecasted CAGR of 12%. Furthermore, HECUB enjoys stable margins via its expansion in key gold mines, acquisitions of accounts of the reopening mines, and mines being a stable clientele. Value-added carbons are used in a plethora of applications. Of particular interest here is the EDLCs, which are used for energy storage in electric vehicles, wind turbines, and consumer electronics. Electric vehicles' growth is led by significant fiscal incentives, tightening of the tailpipe standards, and electrification targets on internal combustion engines. Value-added carbons are expected to contribute to 7% of activated carbon revenue by 2028, growing at a 7-year CAGR of 49%. Premiumly priced value-added carbons are expected to bring about pricing margins for HECUB, owing to the continuous innovation and the high-quality carbons demanded for specialized applications.
Moving towards our third value catalyst. HECUB's sole raw material, being coconut shell-based charcoal, ties the company to the movements of coconut markets, which sees favorable growth potential. The market is dominated by key coconut-producing countries of Sri Lanka, Indonesia, Thailand, and India, where HECUB has its footing. With its multi-country manufacturing model and plans to expand to a fourth coconut-producing country, HECUB leverages its localized sourcing. HECUB's raw material imports will be reduced with the EPZ, with 400 acres of coconut plantations being set up in Sri Lanka. Further, HECUB solely relies on the eco-friendly coconut shell-based charcoal, while its peers rely on the unsustainable coal and wood. Therefore, the bullish sentiments are expected to sustain HECAB sourcing. Moving on to our financials, we forecast HECAB's top line to grow at a 7-year CAGR of 13% in the forecast period, with contributions from activated carbon and environmental engineering to revenue reaching 89% and 11% respectively. HECAB's margins spiked above historical figures in 2021 with the COVID-induced sales boom, growth in value-added products, and cost savings from leading initiatives. However, as per results of Q3 of financial 2022 and management consensus, these margins are unsustainable. To this end, we forecast EBIT margins to average 13% and net margins to average 10.43%. HECAB's strong balance sheet empowers the company for capacity expansion and R&D efforts, which fortifies the sourcing model with a 54% year-on-year expansion in 2021. HECAB's liquidity is anticipated to be favorable, the current ratio of 2.38 times. You as the investor can rest assured with HECAB reporting an ROE of 16% historically, with forecasted ROE expected to average 19.21% in the explicit period. With a constant payout of 30% anticipated, DPS stood at LKR 6.52 by financial year 2028. EPS is expected to average 13.85 rupees in the forecast period with the 8-year CAGR of 19.44%.
Our valuation reflects our key catalysts for HECAB. With HECAB, we used a blend of discounted cash flow valuation and yielding a 12-month target share price of rupees 86, posting a 17% date. In arriving at our DCF price, we computed a weighted average cost of 18.78% as the relevant discounting rate for unlevered free cash flows at a target debt-to-equity ratio of 40%. The cost of equity of 23.64% was computed using the capital asset pricing model, and the after-tax cost of debt was at 6.63%. Our terminal growth for the company stood at a modest 2.5%. Our scenario analysis yielded share prices of rupees 108, 86, and 59. Parameters of value-added segments growth, environmental engineering recovery, and margin improvements. Our sensitivity analysis was conducted on the variables of WACC, terminal growth, gross margin, and effective tax rates, where the recommendations were especially sensitive to GB margins. For relative valuation, our primary multiple was the EV to EBITDA with a target multiple of 6.9 times with a share price of rupees 88. Thus, the relative valuation supports our DCF valuation. ESG is vital to a company like HECAB now more than ever. HECAB by default contributes to the conservation of the environment by its offerings for air and water purification and the promotion of clean energy. Haridangara pits, a key initiative by HECAB to make green what was once the black industry of charcoaling, has seen a significant rise with plans to add 100 pits by 2024. HECAB has taken efforts through Purita Satyavara to improve the livelihood of the community by providing access to purified drinking water. The longevity and resilience of relationships with customers, suppliers, and employees demonstrates HECAB's reputation among its key business partners. HECAB's board of directors consists of 8 executive directors and 7 non-executive directors, out of which 5 are independent. HECAB is led by veterans of the industry with 2 top-ranking chief executives at the helm. Furthermore, the public shareholding stood at 31.75%, well above the CSA requirement of 20%. ESG thus is expected to be ever so strong.
When the storm rages, HECAB is like a coconut palm. It may bend, but it will never break. We conducted a comprehensive risk analysis to assess factors that may sway our recommendation. To this end, we looked at key market, business, financial, and regulatory risks. Raw material price increase may threaten to lower margins. We believe this threat will not materialize as HECAB expands regeneration facilities and consolidates the procurement network. Depreciation of the local currency may threaten HECAB's import margins. However, significant exports and forward contracts of raw materials hedges this risk. The threat of low-cost competitors may dilute the customer base, but HECAB's high-quality offerings, long-term contracts, and reliability in the industry mitigates this risk. With strong growth from purification, positive margins, and a sustainable supply model, we reiterate our buy recommendation for HECAB with a target price of LKR 86, reflecting an upside potential of 17.4%. So, are you ready to pitch in for purity? We have been Team A from the University of Sri Jayawardhanapura, and we are now open to your questions. Thank you very much.
Excellent. Malik, I love your energy. Let's Can we go to the ROIC chart? Yeah, there, down. So what I see in this chart is that 2021 ROIC was close to 20%. And then what I see is that it's falling in 2022, and it's not even going to get back up to 20% in 2026 and 2028. I really like ROIC, and this tells me that this company is really not improving. And so therefore, my question is, why should I invest in a company that's really not improving its ROIC when there are other companies that are, and I see opportunity there?
If I may take that question. Thank you so much for the question. So yes, we do see the fact that ROIC has reached like a historical spike in 2021. But according to the management and according to analysis, it was really revealed that this spike was mainly due to the COVID-induced sales boom for activated carbon. So it is not realistic for our analysis that we continue such high margins. And therefore, according to the latest publications by the company, we have extrapolated for financial 2022. Moving on to the future, we expect the margins to be above the to reach the pre-pandemic levels and be above the pre-pandemic levels, with HECAB's expansion into several industries such as the EDLC market and the expansion into the gold mines, which is what we believe will drive the ROIC into further in our implicit forecast period. Although in the explicit forecast period,
let me ask you, I see the EPS is rising up. Is that from share buybacks, or why is the EPS rising so much when?
Yes, so the EPS, of course, it again reflects our positive sentiments on HECAB's top line from the contributions from certain key segments that were quite stable in the past, such as water treatment and value-added carbons. But they are expected to have a significant boom in the future. Balaji, would you like to explain about the?
Yeah, so one major factor that we have identified contributing to the revenue into the future, as well as the fact that it contributes a significant portion to the margin, is the EDLC. So once all of these top line value drivers that we have stated before materializes, the EPS, we believe that it would rise. If the electrification targets on the EDLCs are basically the activated carbon is used as raw materials in supercapacitor batteries. So with the EV boom happening, with more regulations coming into the picture, there would be a drive up in revenue for that. So we projected those factors to contribute to our EPS growth.
Andrew, can I go?
Yes, please, sir.
Yeah. Thanks for the presentation, guys. Again, can you tell me positive and negative factors of a sharp depreciation of rupee on the company?
Thank you for the question. Let me take this one. Actually, the impact from the depreciation of the rupee is a net positive impact because our revenue is coming from dollars. Therefore, it will cancel out the depreciation effect on the importation cost. Therefore, we recognize it as a net positive impact.
Are there significant import costs?
There is a certain amount of importation cost. However, this will reduce going forward due to the export processing zone that is coming up. Therefore, the production will be localized. Therefore, the raw material sourcing will be localized. Therefore, going forward, the importation cost will be minimized as well.
Any possibility of saying if there's a 10% depreciation of the rupee, what would be the impact on the profitability?
Yes. Based on what Sachin said and the question that you asked, so a rupee impact, like even if there is a negative cost impact that we have, it would be passed on towards the customers. So this has been done even in the past when there were high increase in when it comes to depreciation and the increase in the rupee exchange rates. So this is how it has done. To handle the financial part of that, I think Ashan would be willing to answer it.
Sure. So as you can see on this slide, that the currencies that they are mainly exposed to is the Thai baht and the Indonesian rupiah, mainly because they are having production facilities in these countries. But since the production is localized there too, we believe that even though the currency will depreciate, there won't be a significant impact. Also, Malik, if you can go to the foreign currency projections. There is sentiment right now that the foreign currency would fall significantly in Sri Lanka. However, we believe this is not very likely. Sri Lanka has a debt payment in July of $1 billion US. However, Sri Lanka is taking steps to privatize certain government institutions, as well as they are willing to sell off certain assets with bilateral trade agreements.
You can go ahead.
Okay, thank you.
Thanks. I have a quick question. This is mainly on the supply side challenges. Now, I believe HECAB, their main raw material being coconut shell, right? There were always supply side challenges, and also with the increasing logistics cost, your import of these products would be challenged. So if we go to your margin chart, I think we see significant increases. So whilst, you are going into high value products, how do you think, how have you all assumed, what assumptions have you used for the raw material cost escalations, the logistic cost escalations, and so on?
Thank you for the question. Yeah, so HECAB has a synergizing effect from Haley's advantage. To talk about the supply chain crunch, Haley's advantage facilitates HECAB's logistical issues, but it's not completely a fully fledged solution. But they help in booking orders as well as making sure the orders are delivered and there are no backlogs occurring. In terms of logistical synergy, that would be an answer. To continue, Sapna. Yeah.
Yes, in terms of sourcing, HECAB has the regeneration facilities where they already regenerate the already spent carbons, and at the same time the future projections, the plan is at June. So yeah.
Okay. Can you also explain your weighted average cost of capital calculation?
Sure, I would. So for our weighted average cost of capital, our risk-free rate was taken as the 5-year average, the 10-year average rather, of 5-year treasury bonds of Sri Lanka. Sorry, I will first go through the cost of equity. The cost of equity was taken by the risk-free rate, which is the 10-year average 5-year treasury bonds. Our country risk premium was at 11.98, and our beta was computed based on the peer beta as well as by unlevering the peer beta and levering back to HECAB.
Yes. I think I'll just interrupt just to ask you, because HECAB is, as you said, a multi-country operation. How do you sort of adjust for that? How does this back calculation take that into account, the fact that they're operating from different countries?
Yes, Malik, if you can go to the beta calculation. Yes, so when we are calculating the beta, we gave a 20% weightage into getting the beta of the peers, which are international peers. We did not find listed peers for HECAB in Sri Lanka. Meanwhile, we took 80% of a weightage for the 5-year historical beta of HECAB. In terms of international risk, for risk-free rate, we did not go with a country-weighted risk-free rate because we believe that majority of HECAB's operations are locally based in Sri Lanka, as well as any risk.
More to answer the question.
Okay, and any risk that they face will be not impacted with the Colombo Stock Exchange effect, with the Colombo Stock Exchange, which is what our assumptions were.
Yeah, okay, right. Thank you.
Thank you so much.
Thank you.
Thank you, team. Russell, over to you.
Thank you, Nilakshi, and thank you very much, Team A from University of Jayawardhanapura, for that action-packed presentation and very confident answers. Well done to you once again. Fingers crossed. Let's see how it goes and the judges' feedback to come. We now move into a video by our platinum sponsor, the Colombo Stock Exchange.
Life objectives evolve, and as you prevail over obstacles, you create an extraordinary story. Diversifying your investments is a pivotal decision in this journey to a financially secure future. And investing in the stock market is one of the smartest solutions to create value. In 2021, Colombo Stock Exchange showcased outstanding records in terms of turnover, market capitalization, capital raised, investor interest, diversification of its product portfolio, and improvement of its infrastructure, including policy framework. It's an exciting time to invest in the stock market by joining our journey in creating wealth and value.
And that was our platinum sponsor, the Colombo Stock Exchange. With that, we move into a 10-minute break. For a short breather, you can grab a sip of water and be right back in 10 minutes. The time right now is 4:35. We meet again at 4:45 for Team 3. And we are back, ladies and gentlemen. In case you joined in midway, welcome to the 11th annual local level competitions of the CFA CFA Institute Research Challenge in Sri Lanka, organized and brought to you by the CFA Society, Sri Lanka. We are after an action-packed set of presentations by the University of Kelaniya and Team A of University of Jayawardhanapura. With that, we move on to our third team for the evening. And this time we have the folks from the University of Colombo. Representing the University of Colombo, we've got Kalana Pereira, Malliti Silva, Anjani Sandaruani, Navodya Attanagoda, and Sajini Balasuriya. All the very best to Team University of Colombo. Nilakshi, over to you to give the green light and go ahead.
Thank you, Russell. Team, are you ready?
Yeah.
Judges, are you ready?
Yes.
Ready.
Team, do you want to present your screen? Okay. Your time starts now.
Playing with dollar generating HECAP is a
We have presented already. Hi.
Team, we can restart. Are you ready to start?
But we have presented.
Check your microphone, just count to 5.
Playing with dollar generating HECAP is a POV. Good evening, investors and all related parties. We from the University of Colombo issue a buy recommendation of HECAP PLC based on the target price of 105 rupees, reflecting a 46.5% upside from the closing price of 72 rupees. HECAP's operations are mainly segmented into 2 subsegments, namely activated carbon and environmental engineering. HECAP has an annual turnover of approximately USD 136 million, and HECAP is the largest company in the coconut shell activated carbon industry with a 16% of global market share. HECAP minimizes risk and maximizes opportunities in many dimensions of each of the E, S, and T. With the environment, HECAP addresses the environmental impact by minimizing carbon footprint and wastage. Regarding the social aspect, HECAP heavily invests in CSR activities. HECAP's governance structure represents the highest standard with an experienced board and management team that were confident that the company will deliver the best value to its shareholders. We believe HECAP's superior ESG performance continue to attract ESG conscious investors. We believe that the market has underappreciated the following 3 catalysts: strong market dynamics, its technical excellence in innovation, and increased emphasis on green initiatives. We believe the market is undervalued future demand for activated carbon arising from the promising future electric vehicles and gold mining. According to Bloomberg, electric vehicle sales and gold mining market are expected to grow. However, HECAP has already made its move by being one out of 2 qualified supplier to Tesla and being the long-term supplier of special coconut shell-based activated carbon to large gold mining companies. Therefore, we believe that the HECAP is ideally positioned to take advantage of the expected growth in the industry, especially with reference to the new entrants.
Moving on to the technical excellence, HECAP basically utilized 4 strategies to enhance growth. Strategies consist of consolidation, expansion, backward and forward integration. Through technical excellence and with dedicated R&D, they were able to explore innovative solutions. As a result, they introduced many innovative products and solutions, including pollution-free charcoal in pits called Haripangara. Further, they have planned to increase these green charcoal in pits up to 5,000 within 2 years. Environmental engineering is a segment of HECAP run by Puritas Private Limited, a fully owned subsidiary, which is a low contributing revenue segment where it only contributed 9% last year. Global expansion opportunities are initiated as a result of countries moving towards green initiatives to protect environment and focus more on air and water purification. Direct carbon taxes, safe drinking water act, and emission trading systems are some of these examples. Global water purification industry shows a growth of 9%, whereas global air purification shows 11.8%. These trends shows a promising future for Puritas. Local expansion opportunities include mainly the Water for All project, which proposed 1,000 wastewater management projects. The track record of carrying out government projects and experience gained through partnering with the world-renowned Veolia Water has given Puritas an edge in winning these contracts. Under the regional expansion, we have identified India, Bangladesh, and Pakistan as major targets, as they have recorded the lowest percentage of accessible clean drinking water in the region. We believe that these opportunities will contribute positively to our.
As it is visible, we choose just 5 forces to determine the industrial attractiveness, and it is clearly shows the forces of scores of the 5 forces. Moving next, the revenue reached to 33.9 billion rupees and profits have nearly doubled to 1.5 billion rupees by end by 7% more than earlier. During the pandemic, there was a high demand in activated carbon since it's a key component of air and water purification. While other parts of the world were experiencing lockdowns, HECUB was able to open its manufacturing plants open and had as little effect on sales. Also, surging demand for gold gave margins a boost because the gold extraction process needs the granular carbon. Moreover, HECUB gained the material benefit from its partnership with Tesla, one of the pioneers in global electric vehicle manufacturing. Meanwhile, HECUB recorded a positive revenue growth in environmental sector due to the secure demand of water and air purification industry. Due to COVID-19 pandemic has an impact on the environmental sector's revenue, we anticipate that the impact on the Sri Lankan economy will naturalize and a significant revenue growth will occur during the year 21-22 with the new water and wastewater management proposal in budget 2021. Further, we anticipate positive revenue growth in activated carbon sector since the optimistic future of the electric vehicles and gold extractions. From year 16-17 to 2021, HECUB was able to maintain an upward trend in GP margin. Margins were over 23% except in year 17-18 due to increase in importation cost of raw material caused by the shortage of charcoal in Sri Lanka, Indonesia, and Thailand. Further, due to increased sales volumes and expansion of value-added product portfolio, HECUB was able to maintain a satisfactory GP margin around 20 to 31%. By considering historical data, we assume GP margin will be around 23 to 25% during coming period up to year 25-26. As the improvement in the NIM ratio and the financial leverage ratio shows a significant improvement in ROE during the period from 16-17 to 2021 and able to increase ROE by 23.5% in 2021. Looking at last 5 years, we believe that HECUB will be able to maintain a reasonable ROE from year 21-22 to 25-26 due to steady revenue generations from the activated carbon and the environmental engineering segments.
We estimated the growth adjusted fair value under new normal to be currently undervalued. Our target price was 0 as the average of DCF and relative valuation. We applied a WACC of 11.57% to discount the cash flows. The 5-year treasury bond rate was taken as the risk-free rate, while HECUB's beta was measured using 5-year ASPI and HECUB return. We estimated the market risk premium by considering Sri Lanka's country risk premium defined by Damodara. In our opinion, HECUB can borrow at the AWPLR due to its balance sheet strength and its parent's healthy stability. An incremental risk premium of 2% was added to reflect the current macroeconomic risk and policy interest rate increases. Further, even if the terminal growth and WACC changes, the difference is very insignificant. Well-known peer groups in the industry such as Cabot, Ingevity, and Kurere are in line with the relative valuations of HECUB. We choose this peer group based on the risk appetite, product mix, size, and their geography. We say again that HECUB's long-term story remains strong. We value the stock at a target multiple of 9 times in line with the range of export companies. As you can see, relative valuations are mostly in the similar range. We can convey that these are reliable measures when arriving at the target price. In addition, if we focus on the technical analysis, we will be able to strengthen our buy recommendation further. Also, director dealings describe the positive attitude of the board of directors towards HECUB, where Mr. Karivasan and Ganegoda have purchased a significant amount of shares at 79 rupees, and other directors have also not sold their shares. In this scenario analysis, we have illustrated the potential market price. If the company maintains a substantial confidence toward these factors as they are expected to, they will be able to reach the target price. When considering the future of EVs, if there are a tendency of customers leaning towards the other new trends other than EVs more than expected, will have to face a reduction in the target price in the future as illustrated here. Conversely, the value would increase if there is a promising future furthermore. In the aspect of tech expertise of the company, if HECA fails to maintain the tech leadership or the expertise they currently have, price could go down and vice versa will occur. If there is a widening tech gap with competitors, when it comes to the third factor, if the company
you have
faces
1 minute remaining,
has already estimated the target price would drop and opposite would happen if the company becomes the preferred new source.
We identified this pandemic and raw material availability as two greatest risks. The dramatic spread of COVID-19 has created a negative impact on the global activated carbon market due to the disruption of global supply chain. Also, it is projected that the global demand of activated carbon will be eventually restored with the gradual recovery from the pandemic. HECA is opting for situation decisions during the COVID-19 pandemic to gain trust, customer optimism, and customer confidence. Increases in raw materials prices were evident during the year due to the seasonal fluctuation of crop availability worsened with the logistic and manufacturing issues due to the COVID-19 pandemic. Established manufacturing facilities in 3 major coconut producing countries, Sri Lanka, Indonesia, and Thailand, with plans to expand to a fourth location. Establishment of collecting centers and procurement network outside the coconut triangle of Sri Lanka. The other risks were either moderate probability or moderate impact. We therefore restate our buy recommendation based on the
your time is up.
Strong market dynamics, technical excellence, and increased revenue stream rising from the. Thank you. Now the floor is open for your question.
So maybe I'll ask the first question, and that is the margin of this company is flat over the next 3 to 5 years. And that means that your upside is coming either from strong revenue growth, which I think you have strong revenue growth, but also potentially from margin expansion, or multiple expansion. Like you're expecting that the PE or the EV to EBITDA is going to expand. First question is, can you just explain to me a little bit about what's driving that bottom line, or what's driving that target price, right? Because it's pretty big upside, 49%. Second thing is, and I think another person should think about it while the first person's answering that question. The second thing is, what is it that the market's missing? I mean, you think that this stock's going to go up 49%. If that's so attractive, wouldn't the market already be pushing that stock up high right now? So first question is, what's driving the 49%? It's not coming from net margin, so it seems to be coming from revenue expansion and multiple expansion that you're forecasting. Second question, what is it that you see that the market doesn't see that gets you to a 49% upside? Thank you.
Yeah, so valid question. So by considering the current market condition, we incorporate the high inflation and supply chain crisis into the COGS, as well as due to the labor shortage, HECA will need to incur high labor costs and agree with incentive schemes with the laborers. So that's the main reason why the gross profit margin and the net profit margin has declined over the financial year of 2022 and 2023. So after some times due to this pandemic, so we think after some time this will be normalized and we can come back to the normal life and things will go fine. So also margins were over 23% except in the year 17-18% due to increase in importation cost of raw materials caused by the shortages of charcoal in Sri Lanka, Thailand, and Indonesia. Yeah. Further, due to the increased sales volume and expansion of value-added products portfolio, HECA was able to maintain a satisfactory GP margin around 20 to 31% actually. So by considering the historical data, we assume gross profit margin will be around 23% to 25% during the coming period up to the year 25 to 26. So in the second question you raised, so we expect a 46% upward right? That's right. Actually, valuation is and pricing is two different topics. So the pricing at the stock exchange is relatively based on the market sentiments and all. Basically the customer demand and supply. So from the researches we carried out on social media, stock market influencers, we found one major point. Like it was like most of the people believe that the HECAB is a COVID stock rather than a value stock. So yes, we agree that HECAB were able to increase their revenue from, especially in the face masking during the pandemic time. But it has a long story to unfold. Also, when we're doing our valuation, we face the bearish market actually, like as of 10th December, there was a bearish market. So it also affects to this high upward percentage. Yeah.
Thank you. I'll turn it over to the other judges.
Thanks. Can you please project to the margin projection slide that you had? Right. So I guess the orange line is the net margin line, right? Where you are projecting 13% for FY22?
Yes.
Yeah.
Yes.
How confident are you about this number? Because I think the 9 months results indicate about 8% margin of the company.
So with the current situation in the Sri Lanka, so the inflation is really high actually. So and also there is a supply chain crisis also. The shipping cost is really high. So we thought their margins will go down relatively for this couple of years.
Actually, my question is, you are assuming 13%. My question is, 9 months results indicate about 8% margin of the company, the actual December results. So do you think you are too optimistic here?
Oh, so yeah, I think it is possible results that HECAB can get with their they are the one of the two suppliers to Tesla. Also Volvo, Lotus has also mentioned that they are going to solely manufacture the electric vehicles by end of the 2025. So yeah, they are yes.
Okay.
I would like to add another point.
Can you go to the revenue number that you projected? So FY21, you are saying the revenue is 33 billion, is it?
Yes.
Are you sure about this number? Because I thought the revenue of the company was about 25 billion.
From the financial statements.
Okay, maybe you guys can check that. What I see is a different number. Anyway, fine. Thanks.
Yeah, I'd just like to clarify again on the revenue. Now, we know HECAB is a company that is benefiting significantly from the currency depreciation as well, right? Being an export-oriented company. Can you clearly explain to us how much is coming from, how much of this growth in turnover is actually coming from volume, pricing, and the currency impact? What are the three different assumptions you all have used?
In volume, global sales of electric cars indicate an upward trend with electric vehicles expected to account for approximately 35% of all vehicle sales by 2040. So being the one out of the two qualified supplier to this EDLC to Tesla, which is a leading car manufacturer, and also apart from that, several renowned brands such as Jaguar, Volvo, and Lotus will tend to move entirely towards the electric vehicle industry from 2025. And furthermore, Mahindra and Mahindra India and Ideal Motors Sri Lanka, through their joint venture, have launched the first domestically produced KUV 100 electric vehicle. And also the gold mining market is expected to expand to
like 200.
Yeah, if I can just stop you there, I think we understood the revenue drivers, but I'm just asking in your financial model that you use for valuation, what is the overall volume growth, pricing increase, and currency impact? What were the average growth rates that you use for that to arrive at this composite growth you're showing here?
You have 2 minutes to answer.
Yeah.
Can you give us a range?
HECAB has not actually mentioned the price per activated carbon. Nothing has disclosed in the financial statement. So we got the revenue from the year-on-year change basis.
Okay, so it's a composite. Then did you take any kind of impact from the currency? What are you assuming was the currency depreciation rate?
Yeah, so with the current market condition, we assume that this will continue the exchange rate actually. So we assume the rupee against the USD dollar will be depreciated. So yeah, we assume a depreciation for long time.
Right, thanks. And is there any capital expenditure that has been incorporated in this model? And what's the reason?
Actually, they are investing in several projects, like they are moving traditional gold mining, they are traditional charcoal pits to green charcoal pits. So they are heavily investing in R&D activities.
Yes, what is the capex figure? Did you all take a capital expenditure figure year on year in any particular year? Is there any expansion number that has been incorporated? That was my question really.
Yeah, we took as a percentages to sales figures. So it changes year to year.
Yeah.
Okay, thank you, team. Over to you, Russell.
Thank you, team, and thank you, Nilakshi. And that was, ladies and gentlemen, University of Colombo, grilled with a lot of questions and an exciting presentation by the University of Colombo. Next, we move on to our fourth and final team for this year's competition, and that's Team D this time around from the University of Jayawardhanapura. Now, Team D of University of Jayawardhanapura comprises of Dahami Pereira, Charit Priyashan, Sachini Fernando, Isuri Hettiheva, and Hassan Udayana. Ladies and gentlemen, Team D from University of Jayawardhanapura. All the very best to you. Nilakshi, over to you.
Thank you, Russell. Can I please request the presenters to have their videos on, please? Let's give them a few minutes.
Bear with us a couple of minutes, everyone. We're just waiting for the team to join.
Have all the presenters joined? Can you all please have your videos on?
Hi, I'm Charit Priyashan from Team University Jawaharlal Team G. Can we have some time because there's a problem with joining?
Sure. Okay, Charit. Understood.
Okay, please give.
Harith, are you ready to present?
Actually, we need some time.
All right, everyone, we'll allow Team D to set up and come back to us with an exciting presentation. But until then, I'm going to trouble one of the judges this evening. Mr. Stotts, if I'm to trouble you with a question. We had an interesting conversation just before the competition started, and you were mentioning about your experiences judging some of the regional competitions, and you were also mentioning about the competitions to come over there in Thailand very soon. Could you share with us a glimpse of your experience as a judge in some of the past competitions, and some tips for the students joining in case they plan to be a part of next year's competition?
Definitely, and I have time. So for the team that's setting up from university, for the team that's setting up, you have time. So just get yourself set up. From my perspective, it's all the teams are really good at making their presentation, but it's really about the Q&A. That's the toughest one. And I know the teams that are listening right now have already experienced some of the tough questions. and the team coming up is going to get their tough questions coming. But I've found that, you know, some students can make a great presentation, but it starts to fall apart at the time of the Q&A. So I've done a lot of judging locally and regionally, and I can say that's where it really comes down to. So that's a big point that I would make. Also, the thing that I think most teams don't realize is that, you know, it's important not to be boring. Like Russell, you got a lot of energy, you know, and you're bringing a lot of energy to the way you're emceeing this as an example. And that's important, particularly when it's on a video. And I've recently done some videos on YouTube talking about that and showing the teams from last year. And, you know, really, it's, you got to bring the energy. That's key.
Thank you very much. And that's a very interesting tip. I think anyone joining in might think that it's a very simple one, but actually a very vital one in a modern context, especially when competitions, meetings, and all forums are conducted virtually. And very, very valid point. And technicalities aside, just to reiterate what our judge mentioned, energy is key, be action-packed, and let's hope we've got that coming from Team D of Jayawardhanapura. Just to double check, we still have a bit more time until the rest of the team joins in. And if I'm to ask our judges joining in, Mr. Kakirawara Godege and Ruini Fernando, what are your thoughts on the local context and the kind of support that students who are aspiring a career in capital markets need to get, and what is the kind of direction that you would like to give any of the students who are aspiring to be a part of this competition and to follow suit with a related career? If I'm to trouble Ms. Ruini Fernando with that question.
Yes, Russell, thank you. And I think what's really important is now, particularly in the last 1 or 2 years, we saw many companies getting listed in the market. And like HECUB, some of them are global companies, and they have very different business models. So we would encourage the students and participants in these competitions to really get in depth to the spirit of the company, understand what they're doing, and sort of try to gather the key determinants of profitability and cash flow, right? So there are a multitude of things which affect a company's valuation and its business prospects, but you really have to nail down the 3 or 4 key drivers and try to get to the bottom of that. And as Andrew mentioned, I think presentations need to be fun and interesting to listen to. At the same time, I think when you have 10 minutes, rather than presenting a whole variety of things, maybe you can focus on, like, say, the 5 top things that really drive value. And, you know, then you'll have a more measured and a more, you know, articulate presentation, you know, without it being packed with a lot of facts. Just focus on, you know, the 5-6 key things that drive value. But also, you know, my advice in the broader context of what you asked is really get to the bottom of the business model and what drives the numbers.
Thank you very much. And I think 2 very clear messages so far. One is to keep the energy up, and number 2 is to prioritize and focus on the key pointers and the key recommendations or focus areas, and to keep it tight but very important. So thank you very much. That's our second judge, Ruini Fernando, joining in with her commentaries on how we are to follow suit. All right, so I've got the green light from the fantastic CFA Society committee organizing this event this evening, and looks like we're all set to go with Team D of Sri Jayawardhanapura. So we are good to go, ladies and gentlemen, our 4th and final team.
Thank you,
Team Jayawardhanapura. And then we have from Team Jayawardhanapura, once again, Dahami Pereira, Charit Priyashan, Sachini Fernando, Isuru Hettieva, and Hassan Udayana. All the very best to all of you. and looking forward to an action-packed end to this evening's competition. Nilakshi, over to you.
Thank you, Russell. Team, are you ready?
Yes, we are ready. Shall I share the screen?
Yeah, please share your screen. Judges, are we okay to proceed?
Sure.
So I will indicate when you have only 1 minute left. I will indicate when you have only 1 minute left for your presentation, and I'll also stop you when your time is up. And your time starts now.
Good evening, ladies and gentlemen. In an era of corporations integrating sustainable practices, HACUP surpasses the new age by actively transforming the market. HACUP is a leading manufacturing organization for coconut shell-based activated carbon with a 16% global market share. With 91% of total revenue from the activated carbon segment and 9% from environmental engineering, HACUP currently has a capacity of 55,000 metric tons, of which 50% manufactured in Sri Lanka and the remaining 50% manufactured in Indonesia and Thailand. Hence, located in the world's highest coconut producing countries, they're boosting their value-added product portfolio, targeting a step ahead of the market. We, Team D of the University of Sri Jagadhanapura, issue a buy recommendation with a one-year target price of 93.8 rupees with an upside of 28.5% and a 12-month total return of 32.3%. Our recommendation is based on 4 main catalysts. First, finest product positioning. Second, supremacy of value-added products. Third, integrated supply chain. And finally, positive financial outlook.
Moving on to the first catalyst, industrialization creates carbon emission, increasing water scarcity and air pollution, where absorption is the promising method to remove carbon. Paris Agreement, Kyoto Protocol, Safe Agreement, and Clean Air Act of USA have been introduced to reduce greenhouse gas emission, committing to a net zero carbon emission by financial year 2050. Environmental Protection Agency of the US recommended activated carbon as the best solution for pollution reduction, which mainly comprises 3 activated carbon alternatives, out of which coconut shell-based activated carbon is the best suited for water purification, while it produces less amount of dust and fine carbon particles compared to other alternatives. HACUP is well known for coconut shell-based activated carbon over its 48 years of history, while more than 80% of revenue contribution comes from water, air, and gold segments, out of which water purification make up the largest segment with 45% of contribution to revenue, proving HACUP is well positioned in the activated carbon market.
Moving to the second catalyst, value-added products portfolio of HACUP, which are in high growth segments, significantly contributes to its revenue. EDLC is one such product which is built in electric vehicles. HACUP expanded its capacity by 100% in financial year 2021 of the Ultra Core facility exclusively for production of EDLC. While we believe that HACUP partnering up with Tesla will create more material benefits, as Tesla's increased production of electric vehicles could significantly increase HACUP's demand for EDLC. We further expect to rise global electric vehicle sales with a CAGR of 18% by 2030, increase in demand for EDLC. Other value-added products include activated carbon canisters, cabin air carbons, and heavy metal removals with healthy growth expectations.
Historically, raw material shortages and high import costs led COGS of HACUP to increase from 18.7% to 35.9% in 2017 to 19. This resulted in the implementation of the PO strategies, focusing on integrated supply chain management consisting of consolidate, expand, backward, and forward integration strategies, resulting in the COGS.
Lehmi, you're currently on mute.
Historically, raw material shortages and high input costs led COGS of HACUP to increase from 18.7% to 35.9% in 2017 to 19. This resulted in the implementation of the PO strategies, focusing an integrated supply chain management consisting of consolidate, expand, backward, and forward integration strategies, resulting in the COGS is a revenue percentage of 80.7% in 2019 to 70.4% in 2021. Currently, the 25% of production comes from the Rekogan plant, making Hague the only industry player for in-house production. Although Sri Lankan coconut prices are much volatile, the impact is expected to be mitigated with their long-term supply relationships. We also expect Hague to increase their investments in Haritangala charcoal pits by 17% by 2028, considering their 45% increase in historical investments to reduce more of its import reliance. Since Hague uses imported raw materials only in the Sri Lankan manufacturing facilities, we believe that the initiatives to increase Sri Lankan coconut production by 30% would further reduce its imports. Thereby, we expect this decline to continue as the cost increment CAGR from 2022 to 28 is only 6% compared to the historical 3-year CAGR of 28%.
Moving to the positive financial outlook, we anticipate a price growth of 4% CAGR with the sales volume growth of 4% CAGR along with an average USD selling price growth of 2% CAGR. We believe this will support the targeted revenue growth of 10% CAGR in the next 7 years. The highest GP margin was recorded in financial year 2021 of 30%, while we expect this to further increase up to 36%. Hague recorded a net working cycle of 214 days with the lockdowns imposed in first part of financial year 2021 and the impacts of global shipping crisis. We expect a net working cycle of 182 days in financial year 2028. Further, compared to the historical periods, financial year 2021 has an incremental EPS growth of 95.4% and a DPO of 36% with an expectation of 19% EPS CAGR. With all-round excellence, we expect ROE to stabilize driven by a favorable equity multiplier, interest burden, and EBIT margin.
Moving forward with our valuation, we arrived 1-year target price of 93.8 rupees, representing 28.5% upside from closing price of 73, and thereby yielding a 12-month total return of 32.3%. We used the DCF valuation supported by relative valuation. We employed a WACC of 15.1% with a terminal growth rate of 2%. We derived our cost of equity of 19.8% using CAPM formula. Equity risk premium was calculated based on US market equity risk premium of 4.7% and adjusted with the standard deviation of 10-year monthly S&P index and standard deviation of 10-year monthly ASPI. Our after-tax cost of debt was based on AWNLR of 7.6%. Our beta was calculated using the modern asset beta in the commodity chemical industry and adjust it to the Haykap's equity beta with a targeted debt-to-equity ratio of 39%, from which we arrived with an average beta of 1.3. We conducted a relative valuation, selecting our peers based on the commodity chemical industry and the risk exposure. We used EV/EBITDA due to the capital-intensive nature of the industry with an upside of 34.6%, proving our buy recommendation. Additionally, we undertook a sensitivity analysis considering 0.5% deviations in WACC and terminal growth rate. If WACC increases up to 17%, still it gives an upside reflection to Haykap. We identified operating cost deviations with raw material price fluctuations and inflation as the risk that would impact our buy recommendation.
Moving on to the ESG, Hague has adopted the UN Global Compact principles on sustainable growth, water and wastewater management systems, including ISO Environmental Management System certification. They have obtained so many eco-friendly products and processes certification. They have a good stakeholder management system with as 5 steps with maintaining customer satisfaction rate of 80% for 3 years and 99 customer retention rate by having a good foreign and local employee composition with favorable dividend payments for shareholders. When it comes to the board composition, the CEO and the chairman are 2 different personalities, and there are 15 members on board, which is 7 are executives and 5 are independent. Finally, they have a good corporate governance framework with an overall rating of 95%.
To summarize, we believe to capture the market with its favorable positioning of raw materials, value-added product, and supply chain management with an upside of 28.5% and a dividend yield of 3.8% is in a buy recommend or intent. Thank you. Now we are open to your questions.
I can ask the first question. Can you go back to your ROE chart? Yeah, that one. Can you just explain to me, if we look before the crisis, the ROE of this business was very, low, kind of not that impressive, from let's say 12 down to 9 or something like that. And now all of a sudden it's much higher and it's sustained higher. I can understand that there's some impact from the crisis that we've had and all that. But why is it that it's going to be able to sustain ROE that's almost double what it used to have? Just so I understand that.
I will take the question. In historical periods from 15 to 18, it was because of import disruptions. And from 19 to 21, they implement strategies like backward integration, in-house production like that. So that is the main reason in historical period from financial year 2018 to financial year 2021, the ROE is increasing.
So one of the things that I look for when I'm investing is I like companies that have revenue growing and margin expanding. That's like the dream, right? But here you show that basically the ROE of this company is kind of peaked and going to be steady. That's okay. It's not bad, but it's hard for me to see a really strong bull case here. What do you think is the strongest bull case that the market doesn't really see that clearly right now?
I will take that question. So the company is positioned in the market because of their 16% global market share. Apart from that, they are producing coconut shell-based activated carbon, which is one of the competitive advantages that they take compared to the market, because the other top players, they produce coal-based and wood-based activated carbon.
When I'm saying market, I'm kind of meaning like the stock market. Like, what are the people in the stock market not seeing that you're seeing? Because you're giving a good upside, it looks good, but I'm seeing kind of a flat ROE, and I'm just trying to see, like, what is it from all of your excellent research that you see, like one or two things that maybe the market doesn't understand, the market participants?
So their earnings are growing very high. Their revenue, their top line is growing very high because we expected after 27 that the gold prices are increasing according to the World Bank statistics. So they will capture that as well, because HECAB is in the gold recovery market, out of one of the players in the gold recovery market. So in terms of their revenue, that revenue is increasing, and also their cost is declining because of the strategies that they've implemented under their integrated supply chain management. So the imports are reducing. They're using local in-house production facilities. Their Recogan plant, which is their subsidiary in producing charcoals, they're increasing. So their earnings would increase in terms of their revenue lines, increments in their revenue and the decrements in the costs.
Okay, I'll turn it over to the other judges. Thank you.
Right. In the risk metrics that you mentioned, financial risk has quite a high probable and high impact risk. Could you mention 2 or 3 financial risk factors you are worried about?
Yeah, mainly raw material price risk and inflationary pressure, and also policy frameworks, tariffs, and technology risk, competition from alternatives, mergers and acquisitions. They are the main risks that we identified.
Sorry, what is the last one you said?
Mergers and acquisitions.
Okay. Could you please explain that? What is the M&A risk?
So mergers and acquisition risks is basically we could see in the market, the main competitors in terms of activated carbon are all merging and like the big companies are acquiring the companies, the small companies. And then in that case, it would be a bigger risk for HECA because when they merge with global giants, they would be much more competitive in terms of economies of scale.
Okay. Also, I don't know if you notice this company uses a lot of short-term debt in the capital structure. Any comment on that? Any risk that you see with it?
I will take the question. Yeah, they use short-term debts, but they have a policy when profitability, earnings increases, their debt proportion decreases. So it will, we will expect when borrowings are declined in our forecasted period, and it will not be a bigger risk for HECA.
Okay.
Yeah, thanks. I think you had some clear messages in your slides, and thank you for that. Your presentation also captured those 2 or 3 key messages you wanted to convey. You showed that HECA has revenues and activities accruing from 3 different countries. Going forward, when you looked at your business valuation, what role did these 3 countries play in that valuation? How did it impact the valuation in short? Like, where did you see the growth coming? What was the differences between the 3 destinations that you took into account in your valuation?
So basically, when conducting a valuation, HECA is an expanded company in terms of gaining the revenue. It's the 3 industries that the countries that we mentioned, those were manufacturing countries. Plants are there. So in terms of their revenue side, they get basically most of the revenue is coming from USD. So the dollar is, which is why we consider our equity risk premium in terms of the valuation that USD, we considered the US market as a proxy in calculating our equity risk premium. Also in our revenue drivers, USD selling price is one of the revenue drivers that we considered.
In terms of contribution to the bottom line, how does it work between 3 countries?
The 3 countries would contribute 50% of the total manufacturing capacity is from Sri Lanka. The remaining 50% is 25 from Indonesia and Thailand. So these are manufacturing countries. So the cost is from those countries. And so in terms of the cost, the decrements are happening, and the raw materials are sourced, the countries, Indonesia and Thailand, the raw materials are sourced from those countries itself. But when it comes to Sri Lanka, 25% of our raw materials in the Sri Lankan facility is imported, which we expect that they will decrease because of the strategies that we mentioned under the integrated supply chain.
Yeah. One more question on the basis of your assumptions. I saw that you all had clearly indicated how much of volume, price, and exchange impact was there in your calculation. The exchange impact came in at 2%, if I recall. If you can just go to that slide, please. The breakup was there by volume, price, and exchange rate. Any basis on which these assumptions were derived?
With that question, when historically, from historical years, we can see that exchange rates depreciation, which means per LKR, per USD, LKR is increasing. So we expect this would be continue in our forecasted period as well. So it was calculated as 2%, and when we take the price, it also in historically they transfer in financial year 2021 they transfer price to customers because of cost increments. So we will expect price also increase in forecasted period.
Adding to that, so basically our products, the company's products are USD denominated products, they're selling in terms of USD. So which is why we use the USD selling price as one of our revenue drivers. And historically, the company has expanded their manufacturing capacities by 5,000 metric tons. So which is why we already expected the company to further increase their manufacturing capacities in FY24 as well as 27.
Yeah, thanks. That exchange rate depreciation, you may want to just relook at that number of 2%, because I think it would have been a little bit more than that for Sri Lanka in the past. Yeah, that's something you can check later. Thank you.
Thank you, team. Russell, over to you.
Thank you, team. And that's Team D from the University of Jayawardenepura. The judges asked for energy. Was that enough? The judges asked for prioritization. Did they deliver? Let's find out in a bit. But meanwhile, we'll leave that question to be answered by the judges. So the panel of judges will now move into a breakout room to deliberate and calibrate rather all their scores and to get back to us with the final results. Judges, you may log into the call link that has been sent to you by the CFA Society team to your inbox. Meanwhile, we now move into a video by the subject company for the competition this year, HECAB PLC, and this would give you a glimpse of the actual company the participants meticulously analyzed over the past few weeks, I must say. So let's find out. And this is our subject company.
HECAB PLC is a global leader renowned for its expertise in activated carbon manufacturing and is a diversified Sri Lankan multinational organization with footprint across the continents. HECAB has continuously supported student development programs over the years, and we are happy to be part of this year's CFA Research Challenge as the subject company for the competition. The Research Challenge offers great opportunities for students of many fields to showcase their talent, not only in Sri Lanka, but also in the global arena, mainly in the financial analysis, business writing, and presentation skills. This also creates a platform for students to meet with the industry experts and have exposure to the corporate world etiquette early on. The experience a student obtains in the corporate world is very different to the university education background. Therefore, as a leading corporate, we think it's of paramount importance for students to have this exposure early on so that they will be ready to face this challenge with confidence in the future. We also believe that this competition provides a chance for students to develop on their soft skills like teamwork, time management, and interpersonal skills, which makes this competition all the more interesting, providing students with a holistic experience to develop their professional career. We are hoping to have a fulfilling experience with this year's teams and understand how our company will be evaluated by budding investment analysts. All the best to all teams competing. May the best team win.
This is our first virtual research challenge we had.
The Sri Lankan economy was downgraded by the Fitch ratings, and to perform in a country like, invest in a country like Sri Lanka, the investors need some kind of a reward for investing.
WTC is the first real estate development project in Sri Lanka which provides 750,000 plus square feet commercial and retail space.
We expect these factors to exert a downward pressure on the demand for Grade A office space market, leaving OCR vulnerable.
It gives a green signal that Sri Lanka's vertical living has more room to go in the fridge.
Marina Square, which is located at a prime location with matching amenities as Havelock City, sells their apartments at a 35% discount. Losing the first mover advantage of a city within a city concept and the competitive disadvantage of being a pure player has hurt OZR competitively.
We use different costs of equity for each segment based on CAPM, and our risk-free rate of 6.6% is based on the 5-year Sri Lanka Treasury bond rate, while our terminal growth rate of 3% is based on Sri Lanka's long-term expected GDP growth rate.
So we think that Miraka Tower, with this for technology and being a LEED certified commercial building, we expect that we will grasp that opportunity.
Real estate is like a chess game. All it takes is one blunder to lose the game. But unfortunately for OCR, we have found four: a lackluster industry, geographical mispositioning, intense competition, and depressed financials. So what's your next move?
Thank you all for being here with us today.
The first team that is to present today.
We're the Team University of Colombo, here to present you our investment thesis on Ceylon Cold Stores PLC.
That projection one.
Good evening everyone. We are here to present our analysis for Ceylon Cold Stores PLC.
Were you able to find that out?
Their main strategy is using more of the park.
Thank you.
Good evening, ladies and gentlemen. Whether it is to quench your thirst,
Sri Lanka's per capita income on the rise.
What about the cost per square foot? This foreign exchange risk mitigation.
Good evening everyone. We are Team G. First reason why we issue a sale recommendation.
Have they taken any?
How fast should they expand?
Operational cost acceleration with sugar taxation is impossible.
The runner-up, University of Colombo. Winning the title today, University of Sri Javardhanapura.
As you would have seen, ladies and gentlemen, the CFA Research Challenge is a challenge with a lot of rich history and some intense competition that we've seen across the past few years. Unfortunately, we have to join in virtually, but if not, it would have been a pleasure to have every one of you in one location and experiencing this live. So on that note, we'd like to move into a speech by Mr. Aruna Alvis, the Chief Executive Officer of CFA Society Sri Lanka. Over to you, Mr. Alvis. Aruna, you're on mute, just to clarify. Right, okay. And you could afford to lower your camera just so the face is visible completely.
Right. Thank you. Thank you, Russell. So hello, everyone. It's my pleasure to say a few words at the almost the conclusion of the CFA Institute Research Challenge Sri Lanka 2022, as 4 teams from leading universities compete each other at our local challenge on the target company HECAB PLC. So at the very outset, I would like to congratulate all the teams who took part, and also would like to wish them all the very best in this competition. I think the main objective of having this competition is to ultimately to ensure that we support the development of future finance professionals. As a finance professional, you should have analytical skills and expertise in quantitative methods, economics, financial methods, financial reporting, investment analysis, and portfolio management. Now, this is where I think you need to be a CFA charter holder. As a CFA charter holder, you will be able to develop this set of skills and knowledge, and CFA charter holder will serve you well throughout your career. So in this context, let me say a few words about how CFA Society Sri Lanka supports developing financial professionals, particularly in Sri Lanka. In this context, we have a special committee called Candidate Council. The Candidate Council is dedicated in supporting candidates pursuing the CFA program in Sri Lanka. with exam preparation as well as professional learning and development. So they do quite a lot of programs to support you. And if you are pursuing the CFA right now, I invite you to join the candidate council because you will benefit immensely through being a member of the candidate council. Our next
Mr. Alvis, if I'm to interrupt, we could have you turn the camera lower slightly. Yes, please. We'd love to see you while you speak.
Is that okay? Is that
much
okay?
better? Much better.
All right. Okay.
Thank you.
Thank you. I'm in a situation where don't have the power, so little uncomfortable, but I hope my connection will be there. Okay, so coming back, our next approach is to have our university committee, university outreach committee, which committee is the one who liaises with all the universities and also help you in providing resources to update the knowledge on emerging topics, as well as also recognize by way of offering gold medals for subjects related to the finance. Also, University Outreach Committee focuses on affiliating the universities with our CFA Institute affiliation program under the universities. So if you are, any university may become a CFA affiliated program partner, there are some benefits that universities can benefit out of it. In terms of the promotions, the university can use CFA logo in your program, in your websites, in your communication. So similarly, the CFA Institute too recognized as affiliated university. In terms of the material, you will have CFA program curriculum in a e-format each year, which is updated. So I'm sure there are a lot of material where the finance students can benefit by accessing those material. In addition to that, the CFA Institute carry out some surveys related to your students who is pursuing a CFA program and give you some progress report, which will be helpful for you all. And in addition to that, the most important one is the CFA program awareness scholarship programs. There are a number of scholarships offered by the CFA Institute, especially for university outreach programs, affiliated universities, and I'm sure you can benefit out of being your university being the CFA Institute affiliated program. Finally, as you participated, we have Sri Lanka Research Challenge, which is an annual education initiative which promotes the best practices in equity research among the next generation of analysis through the hands-on mentoring and incentive training in compulsory analysis and presentation skills. So all of you have demonstrated this, and I am sure you would like to see who the winner is, who will have the team will have much greater the opportunities thereafter. So these are some of the things that the CFA Society Sri Lanka offers as part of our candidate outreach program. I'm sure you have experienced how the CFA program is, and we would like to see, if you have not become a CFA charter holder or not applied, that we would like to see you in our area working with us. So with that, I'd like to hand over back to Russell. Over to you, Russell.
Thank you very much. That was Mr. Aruna Alvis, the Chief Executive Officer of CFA Society Sri Lanka. And next we move on to another set of videos by our sponsors, who we are immensely thankful for.
Hi, I'm Erica Estrada, and I'm a product manager with Kaplan Financial Education. I want to congratulate you on participating in this year's research challenge. As a participant, you'll stand out not only for your investment analysis, but also for showing grit and determination during this COVID-19 adversity. We're thrilled to have representatives of universities and Kaplan clients participating in this challenge. We're delighted to support those that share in our educational mission. We'd also like to give a special welcome to many of Kaplan's former and current clients who are participating as industry coaches and faculty advisors. Many of you may be wondering, why is Kaplan launching this initiative and with free resources? Well, you've chosen to invest in yourself, and we'd like to co-invest alongside you by making some of our resources available to you for this challenge. Prep resources from across our financial education offerings will help you stand out both in terms of this research challenge and your academic career. We wish you the best of luck with the challenge, and we hope that you'll find Kaplan's resources helpful for you. Welcome to Kaplan's free resources website for this research challenge. This is being launched for the first time amidst the pandemic to help take your research challenge to the next level. Our partners at the CFA Society will email the link to you. Please bookmark it as you prepare to tackle the valuation of your company as part of the research challenge. Your success in the research challenge depends on how well you understand a vast complexity of factors about one stop. To aid you in this task and arm you with the skills, Kaplan has curated 9 hours of programming across 21 videos from some of its best instructors who teach real-world exam prep courses. You'll also find benefit from the soft skills corporate management training videos that will equip you to succeed in the research challenge as well, and serve you well afterwards as you leave your university to move up the corporate ladder. You can also start lowering your costs of getting your first post-university finance credential by claiming your CFA Research Challenge discount of 15% off Kaplan's prep services by clicking on the portal link for the Chartered Financial Analyst, CFP designation, and FINRA securities licensing. You can access featured content from all 3 of these designations, which will be key to your research challenge's major themes. Do take advantage of the insights in our Cash Flow Fundamentals video, which comes straight from Schweizer Prep for the CFA Level 1, which you, by the way, can take while still in your last year of university. How does your company fit into the world around it? You can put the ESG overlay on your valuation using our hot off the press video, which also contains insights on the COVID-19 impact on socially responsible investing from Kaplan's College for Financial Planning. Your team will ponder if the way the stock trades will impact your buy, sell, hold recommendations. Don't miss out on the insights into the world of stock brokering and securities trading by watching the video from Kaplan's Prep for FINRA Security Industry Essential, or SIE, which you can also start studying for to distinguish your resume from others applying for jobs in this industry. These are 3 videos that come from the collection of 20 self-paced recordings, which Kaplan curated for you by grouping them in each of the 5 core stages of the CFA Research Challenge. Team leadership and instruction tools for the coaches can be found on the tab for faculty advisors and industry mentors. You'll find a treasure trove of videos from all of our prep, including CFA, CFP, and licensing, which will help you make sense of the company's financials. Even more impressive is the library of tools which you'll need to value your stock. Don't forget to check out our extra resources as you consider your company's environment, relationships with stakeholders, and corporate governance. Get ahead of the competitors as you prepare to present your pitch by learning the tricks of executives, including influence and persuasion, to help get your ideas accepted. For the first time ever, you'll have access to 9 hours of content and insights without having to make a purchase. Don't miss out on the chance to take your research challenge to the next level using these free resources from Kaplan. We here at Kaplan are invested in taking you to the next level of the research challenge, the next level of your academic journey, the next level of your job placement, and the next levels of your career thereafter. You already took a big step towards that by participating in the research challenge. And Kaplan resources are here for you wherever you decide to go next. Hi, I'm
Life objectives evolve, and as you prevail over obstacles, you create an extraordinary story. Diversifying your investments is a pivotal decision in this journey to a financially secure future. and investing in the stock market is one of the smartest solutions to create value. In 2021, Colombo Stock Exchange showcased outstanding records in terms of turnover, market capitalization, capital raised, investor interest, diversification of its product portfolio, and improvement of its infrastructure, including policy framework. It's an exciting time to invest in the stock market by joining our journey in creating wealth and value. Life objectives evolve, and as you prevail over obstacles, you create an extraordinary story. Diversifying your investments is a pivotal decision in this journey to a financially secure future, and investing in the stock market is one of the smartest solutions to create value. In 2021, Colombo Stock Exchange showcased outstanding records in terms of turnover, market capitalization, capital raised, investor interest, diversification of its product portfolio, and improvement of its infrastructure, including policy framework. It's an exciting time to invest in the stock market by joining our journey in creating wealth and value.
Never in the history of the financial services industry has it been through such a change. Markets are evolving swiftly. Customer expectations are growing. Business models are being disrupted. And regulators are bringing in new reforms. Being a leader is not enough. Organizations need to evolve and transform. Human capital needs to be integrated with emerging technology. We bring 20 years of experience of being a trusted partner to financial services firms. We improve front office efficiency through our tailored research, analytics, and data services, empowering global financial services companies to innovate and transform their business models. Our proprietary technology and automation platform, BEAT, provides domain-specific technology crafted to clients' needs. We are committed to driving clients' revenues, improving operational efficiency, and continually innovating to transform our clients' business models and processes, enabling them to do more with less. We are Acuity Knowledge Partners. Empower, innovate, transform.
All right, so that's a set of videos from our sponsors, and we also heard from the CEO of CFA Society and HECAP, the subject company. May I request all the teams to switch on the cameras while the judges deliberate and kind of finalize your final scores and decide as to who will be making it through to the sub-regional rounds of the CFA Research Challenge. All right. All of you will be made panelists so that you will appear on the live stream with your pretty faces and smartly dressed gents and ladies, I must say. So I see the University of Jayawardhanapura and Sharit, the University of, again, Jayawardhanapura, I assume, and University of Colombo, alongside the University of California joining us. Let me start off with an eager bunch of participants from Team A of the University of Jayawardhanapura, eagerly listening in and tuned into what's going to happen. Guys, what do you have to say? How was your journey so far? Was it interesting? How long have you been prepping for? It was an action-packed presentation from your end. How has it been? Are you grateful that this is now over? Or fingers crossed it's not, right?
Yeah, thanks. It was challenging, but it was really fun doing the research with these guys. I mean, I couldn't have asked for anything better. It took effort. It took so much of effort. There was many nights that we stayed, but yeah, at the end it was super and really exciting for us.
Yep, and that's great to hear. That's Team A. from the University of Jawaharlal. We've got another team joining in through one video output. So I'm not sure where the team is right now, but we also have the University of Colombo joining in. What do you all have to say? And can I know anything interesting that happened? We were all concerned that about the power situation right now, and really hoping that nothing would come through that will affect the live stream. Thankfully, that didn't happen. But do you all have to share anything that that happened very interestingly during your prep, or was it an easy journey right throughout?
So it was an Amazon journey with these guys. Had a good time with my team members and also with the mentor. Especially, I have to mention that. So I, on behalf of my team and the University of Colombo, would like to express thanking everyone who participate in this kind of event for us. So we can showcase our talents and learn so many things. So yeah, cheers.
All right. Anyone else from the University of Colombo who would like to add on to what Kalana just mentioned? We have Sajini, Navodaya, Maliti, and Anjani joining in from the University of Colombo.
Yeah, it was an amazing journey working with these guys. It was really fun, and it was amazing. It was challenging though, but I think we worked as a team and we managed to do it.
All right. Thank you, Sajini. And I'm going to go over to the University of Jawaharlal, another team joining in through one camera, eagerly waiting. We can see the excitement and the sense of eagerness in that camera as well. And that, if I'm not mistaken, was the last team to present. Guys, tell us, how has it been? What was the support like from CFA Society and the university that you were a part of? And what sort of an ecosystem of support did you have around you in your journey towards presenting your findings today?
So yeah, we got a tremendous support from our university as well as our seniors who were past winners of the CFA overall research challenge. So apart from that, this was a tremendous journey because we all got a great exposure from all of the mentors as well as our industry mentor, university mentor. So yeah, as well as our opposite team, they were so supportive as well. We had a great opportunity to discuss and all. So yeah, it was really fun.
All right. So there was a lot of cross-team synergies, I believe. Is that what you mean to say? In the spirit of being in the same university?
Yeah, competition as well as we were friends. We were from the same department. So yeah, we had fun.
Great to hear. That's University of Jawaharlal, and our last team, University of Kelaniya. If I'm to ask you about the kind of learnings that you would have had, definitely it was an interesting case study. HECAB made some good headlines for all the right reasons in the Colombo stock exchange and the share markets recently. And the share market as a whole has been a hot topic for everyone in Sri Lanka and all around. Team University of Kelaniya, how was your experience? What did you learn? And what were the key takeouts from being a part of this competition, let alone winning the challenge, which will be disclosed in a few minutes?
Yes, Rasa. So actually eagerly waiting to see whether we did perform well. So been working on the challenge since October, and this is my entire team's first time doing such a financial model, a report. And HECAB itself is a very challenging company to cover, given that the activated carbon industry itself is a very less known industry. So definitely along the way, we had to reach out to people, dig into stuff, and it was a really big learning curve for all of us. So we're eagerly waiting. Hope that our efforts, late nights, will finally pay off. Yes.
Great stuff. And that was Dimani from the University of Kelaniya. And I continue to see some eager faces. I feel like holding on to that suspense a bit more, just so that we can draw on that energy. And I've got the green light from the organizers. And yes, the judges are ready with the results. But before that, we move on to a speech by a very important person, I must say. And this time around, we have the vote of thanks being delivered by Samalka Aturalia, the chair of the Sri Lanka Research Challenge Committee for this year. And a big round of virtual applause, if we could have it from the participants and everyone joining in. Samalka and the team behind the CFA Research Challenge Sri Lanka has been an integral part of what you've seen on screen today, and the background work that went into having and staging this challenge in a context that is very volatile, I must say. So once again, I'd like to invite Samalka Aturalia, the chair of the Sri Lanka Research Challenge Committee. Over to you.
Thanks so much, Russell. Good evening, ladies and gentlemen. I think we've had quite the competition today. But before we move on to the most exciting part of today's event, like Russell said, I would like to say thank you to everyone who worked tirelessly over the last few months to make today's event a success. First and foremost, I think I need to thank all the participants, all the teams that took part this year. We had a record number of 18 teams participating in the challenge, and I'm grateful to all the students that put in a lot of effort to submit a final report. And this was despite the challenges of a pandemic and having to work through your own university schedules and exams. So thanks a lot to all the participants. Next, I would also like to make a special mention of the university mentors and also the 18 industry mentors. Mind you, these are all CFA charter holders who I know put in a lot of effort to guide their respective teams. We also had another 16 charter holders coming on board as graders, and they were led by Aruna Pereira. So thank you to all of you and for the time spared despite your very busy schedules. At this point, I would also like to mention the university outreach team led by Nuwan for helping us on numerous occasions during the competition. I must also extend my gratitude to HECAB PLC for coming on board as this year's subject company. A special thank you to Mr. Karyabasan, Managing Director of HECAB PLC, and Ms. Abe Ratna, the CFO of HECAB. I also need to thank the sponsors this year, without whom this event would not have been possible. Thank you to the Colombo Stock Exchange, Acuity Partners, Senfin, Capital Alliance, NDB Capital Holdings, First Capital, and Uzabase. I also need to thank our training partner, Acuity Knowledge Partners, print media partner, Daily FT, as well as our event partner, Kaplan Schwezer. Next, I also need to thank our judges, the judging panel. I'm very grateful to Andrew, Rubini, and Senaka. Thank you so much for accepting our invitation to be a part of today's event. Finally, I also need to thank the CFA Institute, the Research Challenge Committee, and the CFA Society Sri Lanka, who worked very hard over the last few weeks to tie up all loose ends. I'm extremely grateful to all of you, including Aruna Alvis, Inisha, Nilakshi, Yonita, Sandanika, and Raghuram, as well as Srinath from Impact Labs, and of course, our MC this evening, Russell, who has brought in a lot of energy and oomph to today's event to make up for it not being a physical one. So with that, I would like to hand it back to you, Russell, because I think you should have received the much awaited results of the Sri Lanka Research Challenge 2022. Thank you.
Yes, thank you very much, Samalka. And once again, ladies and gentlemen, participants, that's the main person behind the scene of this year's Research Challenge. The WhatsApp group has been going haywire with the results being announced, and there's a lot of planning that went into it, and kudos to Samalka and the team behind this year's competition. Now, this year, the CFA Institute's Global Research Challenge competition, the finals will be held on the 17th of May, and the winning team of the local finals here this evening will advance to the sub-regional competition, and then thereafter have a chance to progress to the regional and global competitions. With that, Here's hoping I don't pull a Steve Harvey. Let me just recheck. Yes. All right. So we've got confirmation from the judges and the committee. The runners-up of the Sri Lanka CFA Research Challenge for this year would be give it up for Team D of Sri Jayawardhanapura University. Congratulations to Team D of Sri Jayawardhanapura.
Now we can't go to that because
I think someone is trying to say something, or all right. All right, I was just worried there for a second, thinking that I actually pulled a Steve Harvey and someone was trying to correct me. All right, so congratulations to Team D of Sri Jayawardhanapura University. And to conclude with the winners of this year's CFA Research Challenge for Sri Lanka, we have a heartiest congratulations to Team A of Sri Jayawardhanapura University, the winners of this year's competition and making it through to the sub-regional competitions from now on. And I'm not sure if that was the team that mentioned that they're relieved, but well, guess what? You've got one more competition to go through, and we have one team going through to the finals, and this time it's the University of Jayawardhanapura Team A. And we see all hugs going around. Not sure if everyone could see this, but on the broadcast, we have a very excited Team A concluding the research challenge. And that's not to underestimate or underappreciate any of the other teams' efforts. And I believe all the other three teams also deserve a great appreciation for being fiercely competitive in what is arguably one of the most intellectually stimulating competitions for not only students, but even some of the most skillful professionals in the corporate field and specifically capital markets. So congratulations. Can we give everyone a big round of applause for being great sports and being a part of the legendary CFA Research Challenge here in Sri Lanka. And with that, we'd like to conclude. Once again, thank you to CFA Society. Thank you to all the judges. Thank you to the organizing committee members. And thank you once again to the winners and the participants for being a part of what has been an incredible competition so far and the prep behind it. We hope all participants of this year's CFA Research Challenge benefited from the journey and the learnings that came through it. Thank you all for joining in. And if you are aspiring to be a part of this competition, do stay tuned to the news from the CFA Society and about what's to come. So congratulations once again to Team A of the University of Jayawardhanapura. We wish you all the very best and thank you once again to everyone for joining in. Have a pleasant evening. Take care.